Hello and welcome. It's David Widmar, co-founder and CEO of Ag Economic Insights, AEI.ag, and joining you this week for the Ag Forecast Network question of the week. Of course, the Ag Forecast Network is the unique decision-making tool that helps producers and those who work with producers think about uncertainty in a framework that allows us to make improvements and do better. And so the question this week is around trade, and specifically it's the $35 billion question with respect to China. A little bit of background. Before the phase one trade agreement got started, as it looked like it was going to happen, we stepped back and said, what would it look like for China's purchases of US ag products to really make a big increase? And what we'd found is that the previous high for China's purchases was about $29 billion. And so we stepped back and thought 35 billion would represent a really big uptick in China's purchases. So in 2020, we had a question through the forecast network: what's the probability of China's purchases for that year being more than 35 billion? It didn't happen. It got to about 29.7 or so. It got close to 29 billion. And then for 2021, we re-upped the question and we thought, let's see how activity plays out here in 2021. And of course, the most recent trade data came out and the question got resolved. So let's take a look at this question and dive into the Ag Forecast Network just a little bit. So this question has got scored. It's moved over to the score side of the platform. And the question specifically, what's the probability of U.S. exports of ag and related products to China exceeding $35 billion in 2021? And we have the background article. You can dive in and read more about it. And the final tally came in at $35.9 billion. And green is my forecast. And as you can see, I thought it seemed like a possibility. I got a little nervous in December and then changed my forecast when more data became available. It was a nail biter. And it was a nail biter because the seasonality in soybeans, but also the shifting nature of the purchase compositions here. And we'll talk about that in just a second. And the dotted line represents the forecast network consensus. As you can see, it started strong, softened throughout the summer, and then came back through the fall as we got more and more data. My score here is the percentile rank 50%, which means I did about right down the middle. So half of the participants got a better score than I did, half the participants got a lower score than I did. And in hindsight, I should have been changing my forecast probably throughout the fall as we got more data. And this is part of the process, is to review and think back about where our forecasts could have done better and what we might have missed throughout the year. Of course, this question was open for a long time, so there's a lot of opportunities to update our thinking based on the new data. Let's dive in. We're going to follow up with a lot of future content, but here's a look at where purchases came out, how that stacked up. Big increases, more than a doubling from the trade war lows. And as you can see, $36 billion, nearly $36 billion is about a 25% increase over 2020 levels. So a huge uptick. Of course, these are the dollar value. And this is unique because it allows us to add up all the purchases across all the commodities. However, it doesn't allow us to really untangle what drove that increase. Was it more quantities or was it higher prices? And again, we'll unpack this in future articles. Of course, there's been a lot of more purchases coming out of the corn side of China in the last 12 to 18 months. So again, valuable measure, just got to understand its limitations. One thing I want to point out here, and this is something that impacted my thinking a little bit, is China's purchases historically have been about half soybeans, half non-soybeans. And as you can see, 2021 activity for soybeans on a dollar basis was pretty much unchanged. And so haven't seen a record amount of soybean activity playing out in these latest record total purchases coming out of China. But as we dive into the next figure, you can see here that it's these non-soybean purchases. So previously, we got to a little above $15 billion in 2013 of non-soybean purchases. Those crossed well into the $20 billion range here in 2021. So to wrap this up, it's always important to sort of think about the big picture. And a lot of folks have been focusing on, will China read its phase one trade agreement? And that's important. Don't want to diminish that. But we think it's also important to think about where China's purchases fit into the bigger picture. In a lot of cases, the phase one trade agreement is a little slightly different set of components or slightly different set of commodities looked at than what we did for this data set. But this data set allows us to go back several years and to really see what's been going on. This has been a good development and a good story for U.S. agriculture, with China out purchasing more than we've seen in the past. Now, of course, the question going into 2022 is, will this pace continue? Will China continue to be purchasing at new levels? And finally, we got to consider the specific commodity volumes, and we'll break those down in the future articles. So again, watch for the new Ag Forecast Network question that's going to be coming out about 2022 purchases to China, but also visit the site, update your forecast, or get started with your free trial today. Again, I'm David Widmar, co-founder and CEO of Ag Economic Insights. Until we next time, stay curious.